Great, all right, I will let you all take it away.
Thanks.
Okay, so we can use this helps us right in.
Yeah, maybe quick intros.
Okay, I'm Sandra Stone, I'm Chair Emerita of the Maine Angels, and I also am very involved in trying to focus on female founders. I started the Northern New England Women's Investor Network, which is an educational organization to work with preparing women to understand angel investing better.
I'm Brian Walker, also a Maine Angel. I've been so since about 2016. Have invested in a number of both female-led and male-led companies. Been very happy to be here.
I'm Audrey Lonis. I've been a member of the Angels since 2018 and enjoy working with entrepreneurs, both in the Angels as well as some of my work with SCORE and a Center for Entrepreneurs. And I too I want to support Maine companies as well as female founders.
So we'll just put up the first question then, right?
Okay.
So I guess maybe as a quick background, Rachel and Sarah asked us to answer some questions for you. So what we were going to do is kind of work through those and then let you guys ask questions as we go. And here are the questions just so you have a sense of what we're going to talk about. I'll just let everybody read those. And then if you have additional questions, we'll make sure we get.
Okay, so the first one is, well, what is angel investing anyway? And it really is when a private individual invests in early stage companies in return for either a certain percentage of the ownership or financing terms for repayment. Angels invest their own money as opposed to like a venture capitalist who's pooling other people's money and investing that. And angel investors usually expect to make a return on their money higher than what they can get at a very safe and somewhat insured, as we've learned, bank deposits, and have it be attractive enough to compensate for taking the early unproven risk of a startup business. They also usually engage their time, talent, and referrals. And investors are likely to require regular updates and quarterly financials, and at larger investment amounts may require either a board seat or board observation rights, which would require that you actually have a board as well. Angel investing is usually pursued when a founder has tapped out their own resources and is usually going to friends and family, but yet does not have enough sales traction or financial track record to obtain conventional bank financing. A little bit about the pros or the cons for founders considering angel investing. I'd say the advantages are the business doesn't have to repay the fund like you have to repay the bank, because you're giving them ownership shares in exchange for money, unlike debt, which has required payback terms. A VC or a bank financing is usually reserved for more established businesses beyond the startup phase. So is the source of funding if the bank has shown promise for profits but still needs capital to develop. And because an angel's money is on the line, as I mentioned, they can be highly motivated to help you succeed through mentoring or offering direct management help. I'm going to just briefly talk about three disadvantages. One disadvantage is that you actually have to give up a piece of your business to someone else. So you're sharing the ownership of your business and sometimes some of those decisions. A large investment amount will usually require a board seat. And that is also with regular investor communication and financial reports. And in the unlikely event that everything goes south and the business owners could actually lose control of their business if angel investors determine that they're keeping the company to succeed.
Great. And so question 2, I think, is you.
So Sandra alluded to some of these pieces, but what does it mean if you have angel investing in your business? You get the mentorship and guidance available to you from the investor or investors. Some are more involved than others. They want to help you succeed, obviously, because now they have a partial equity in the company. But you should see that as a plus in terms of having a broad range of different expertise available to you for your business, because no one is good at everything. So having somebody to help you decide how you move forward in an area, if you're not comfortable with financial projections or need some help with sales and marketing, it's always great to have somebody who is eager to help you out that you can call. Angel investors also have the potential to provide you contacts if you're in connections. So if you're looking to hire somebody with a very special expertise, they may have somebody in their network. They may know people who would be great customers for you, as well as other funders and long-term, if you're going to be interested in being acquired or exiting, they may also know people in that area. And some of them are experienced in that entrepreneurs themselves, so they know what it's like when it's time to exit, or when you really need to scale up and how to move that forward. And as Sandra said, angel investors are investing their money in exchange for a part of your company, share of your company.
Oh, that's me.
That's yours.
So what types of businesses are a good fit? We're really looking for innovative product or service that has sort of what we call a proof of concept, with or a minimum viable product. What makes it unique? What keeps the competition from copying it, improving it, or do you have IP or a patent? We also are looking for a committed management team capable of executing on the plan that you bring to us. Having put our own money in and usually would like to see you have put your own money in as well, which means that you we call it have your own skin in the game. We'd like to see scalable businesses with high potential for like a 5 or a 10x return within 3 to 7 years. The return to the investors through what we call an exit is how do we get out of the company? We're not a long-term silent partner. We're doing this as an investment. But that can be through sale of the company, strategic buyout, financial strength of cash generation to either buy out or obtain bank debt to buy out your investors. Appropriate deal terms and a realistic current valuation, not like, oh, my business is going to be worth $1 million in 5 years. So you need to, my business now is worth that much. It's not what it's worth in the future, it's what it's worth now. And that's what we would be buying into at this point. Financial projections need to be based on sound assumptions. You need to be able to help us know what we came up with that, oh yeah, I'm going to grow 10% a year. Well, what is your assumption? Why is that? Is it because of what, finding the money that you get from an investor can help you buy more advertising, marketing, hire somebody to improve your website, like understand what it is that we're getting for the money that we're putting in. And for Maine Angels, it really needs to be Maine-based or New England venture preferred. So that means that there's 22 other angel groups just in New England. If somebody from Massachusetts is coming to us, we'd say, go to your local Massachusetts or Boston Angel investor group, and they would then refer you in. I put up there a couple logos of some of the businesses that we've got. 3 are female founded, 3 are not, but American Unagi is aquaculture up in Waterboro, which is raising fresh live eels. Tan Bark is consumer products. They're doing molded fiber for sustainable compostable packaging. Atlantic Sea Farms is aquaculture, food and beverage, edible sea vegetable products. Rockstep is biotechnology software, which is preclinical drug discovery platform. Vetro is a software, web mapping and GIS software. And Highbite is another female founder, co-founder of software for the industrial space. That's one, I guess. And then what isn't a good fit? What kind of businesses are the ones that we will often decline? Really, it's when the founder is not really ready for outside investment. Either they don't know their business in the industry, they are unable to articulate what their business model is. They haven't just demonstrated enough commitment to the startup. They aren't interested in, are absolutely resistant to having an examination of their business in a due diligence process, which we need to do in order to determine if we're gonna put our money in. They're unwilling to incorporate having investors actually have oversight expectations. We want to know, like, what is your financial statement? Where is your balance sheet? At this point in the game. Sometimes it's because they're looking for a passive investor. They don't want anyone to have given them any kind of input or coaching. And they're not interested in an exit or buying out investors in 7 years. Also, it's the business type. If there's something that's not scalable or really growth oriented, like most one location retail places, small business like hairdressers, dog grooming, dog walking, any kind of small businesses are great. They're just not the right ones for us because we're looking for them to really scale. Apps are very useful. They have a place out there, but unless it's really a platform technology, that's not a scalable one for us here.
So we talked about the type of business, and there's also the stage of the business. What we're primarily looking for, and this kind of links to what Sandra was talking about, is something that's innovative, that has a point of differentiation versus other things that are out there. That can be either a product or a service. In the perfect world, you've gotten to that point of what we call proof of concept, or minimum viable product, which is a way that you've actually been able to create either the product or service to a point that it can be looked at, viewed at, you can get customer reaction to it. You've even possibly gotten to that place where people are expressing an interest in it through market research and the like. And the second thing we look for, and it's probably no surprise given what you've already heard, is we're looking for an established management team and a committed management team. And it's funny because we put these slides together individually, but you can see the word skin in the game again, which is a really important part of this, because, and I wanted to just take a moment to explain the why on skin in the game. When you have taken some of your own resources, and resources are money, they're time, they're different ways of showing your commitment. And if you've also gone out to friends and family, you're showing your belief in your business. You're actually demonstrating that, hey, I believe in what I'm doing enough that I'm taking my time. I could be out having a job that would be paying me this, but instead I'm doing this. I've taken my own savings and have invested. I have gotten the investments from people I know closely. That's something that's really important to us. And one of the reasons why we think that's so important is not only does it show commitment, but almost every company will go through a time when things get really difficult. And just from a pure, reality is, if you have skin in the game, if you've made a commitment financially with time and the like, you're more likely to stick it out when things get really, really tough. And there will be tough times in any business approach. So that's why we always talk about skin in the game. And Sandra also talked about this a little bit, but it's also about what your needed capital needs are. If you're looking for $10,000, you might be looking to an individual angel to provide that, an individual, but the groups that we generally do, the way Maine Angels works is, as a group, we look at the different options and make a decision individually about that. So most companies are coming to us looking for somewhere between $500,000 and $3 million. And do we ever see anybody below 5? Sometimes, right? So it could be lower.
Maybe 300.
Yeah. Some of our raises will be even 80 or 90,000 contributing to an overall amount. But generally, I would say maybe that 500 number, now that I'm looking at it, is a little high. But I would say 200 to 300, something like that would be on the lower end generally of what you're looking for. And part of that, I think it was already referred to in one of the slides, is if you're going for less than that, then the the work and the effort that you have to put in order to get to that place where you're coming to us is probably not in alignment. And then very importantly is we want to see a solid business plan that addresses all the different key elements. And I think I put, yeah, here I did. I'll just build this really quickly. Sometimes people come and ask us like, well, what are the things that you want to know? And this is a very top line, but these are the key components of what when we go through the due diligence process that we generally are looking for. The management team, we've already talked a lot about in terms of that committed and knowledgeable management team. We want people who have experience or knowledge in the area that they're in, that they're working in. With the technology product is all about, what is it you have that's differentiated in the market, and that would be something that people would want. We want to also know that not only do you have that plan for the immediate initial thing, but you're at least thinking about the product development plan that's going to move forward. And one of the reasons for that is because I think back to what Sandra was talking about of having a 3 to 7, 3 to 5, 5 to 10x, meaning 500% gain in order for us to get a payback. We know that it has to be a business that's going to be able to go from something that's relatively small when we're seeing it to something that's much larger, what we call scale. So that's one of the reasons for that. We want to make sure you understand the market that you're going into and that it aligns with what we think that makes sense, and that you have a very solid go-to-market plan. And the go-to-market is, if you think about the market as being, here are the trends and here's how this thing that I'm building is going to fit into that, and why it's on trend and why it will be something that people will want. The go-to-market plan has a lot to do with how you are going to then communicate that through both marketing and sales, so that you have a rational way that you're going to get to that kind of growth that we're looking for. And then as moving from left to right, the next three, the revenue model, financials and projections and funding, are all things that we want to have a sense that you understand and that they're reasonable. And as I think Sandra mentioned, in governance, we get into a little bit of understanding. Do you have a board? Who are the other people that are advising? Because you want to make sure that there's oversight. And this, again, is one of the places where you may go, I don't really want outside people telling me what to do. And it's not that angels are heavy duty, I think, hard on oversight. We're there more to help, but we do want to make sure that there's governance and an understanding. And then syndicate and deal terms gets into, if you're doing a larger raise, some of the things that we need to understand is how can we help you find other angels that would also be able to help. And then that exit is really important. How are we going to get money back out? Because remember, it's not a loan. It's not like you're going to pay us back a little bit every month or every year. There has to be an event that occurs that frees up capital that you can then pay us back. You guys want to add on that?
I would just say, one of the things I always like to say about the management team is we're looking for an A team, even if it's a B idea versus a B team with an A idea. It's gonna get tough. 50% of businesses fail. And we need to know that there's tenacity and grit and determination, and I'm gonna do whatever it takes to make this work, because we're in there as your partner. We're trying to move forward together, and it's in our best interest for both of us to have the business do well. And however we can make that happen, but the team is the one that's gonna do the most of the work. We're just there as cheerleaders and support and coaches and mentors.
And I'd like to add to that, a lot of these elements up here, there are a lot of resources in Maine to help you understand that, and also address these issues and whatever, if you're doing an application. So between SCORE, Women's Business Center, those are both throughout the state, small business SBA, and in other parts of the state, in Bangor and Waterville, there are also organizations that can help you as well. So all those scores throughout. And then there are other programs like Top Gun for Maine Center for Entrepreneurs, Jericho Labs, and Waterville, and in Bangor, what's the Humane, Upstart.
Yeah, Maine's very blessed to have quite a lot of resources that are available, and of course, Women's Business Center would be at the top of the line on that. So you guys are in a good spot. All right, let's see what's next. Oh, okay, I had this one too, and then I'll stop talking. So one of the things that was asked of us is just some examples of investments that were made and why we invested. And so Atlantic Sea Farms is one we've mentioned, women led, in the area of consumer packaged goods, a food product that's taking seaweed and translating it and developing it into amazing products. And they're working very, very closely with the lobster fisher people up and down the coast, giving them a counter-cyclical business to work when the lobster industry is down generally. So it really works very well on that.
Off seasons.
It's off season, thank you.
Yeah.
Much better way to say it.
Yeah.
Yeah.
Lobster, you don't want to really be out in the water like November to February,
Right, it was,
March, and that's exactly when they're growing this.
and it's a lot of the same equipment and the like, so it's just an absolutely perfect situation. And so why did we invest? We thought it was very much aligned with the market trends for healthier food. Seaweed is, it may sound horrible, but try some of their products. They're really, really good. I had one of their veggie burgers the other night.
Veggie
The
burger.
sea veggie burger, you would think, okay, that doesn't sound very good. Try it,
Yeah,
they're
so
good.
good.
Rosemont Market, you can get them.
Yeah,
It's
that-
also a sales pitch.
Also sea chi instead of kimchi. It's really good.
Really good stuff. They have a very strong management team. They have a lot of experience and a lot of knowledge and a lot of support from the ecosystem around this. They had a phenomenally solid business plan that really kind of outlined how they were going to grow that business and the many steps that it would take in order to get to that place. And then lastly, it was really good for the environment. And it's good for Maine. Good for the environment. Seaweed is amazing at cleansing water and taking carbon sequestration. It's phenomenal for that way. So you're growing this really healthy food, and by growing it, you're actually helping the environment. And also good for Maine in terms of many of these communities that rely solely on fishing now have a what'd you call it again?
Off season.
Off-season business that has leveled out their abilities to have money and revenue, and they have pictures of like the lobster guys holding up their first check, you know, from.
It's teasing them and he goes, yeah, $1,000 check, and they're going, how am I getting involved in this?
So it's a great business, and they're doing good things. And I would just also say the strong management team proved itself during COVID, when a lot of the sales that they were doing were through retail sales, restaurants. And the restaurant business, of course, plummeted, and they made that adjustment to move more of their products into the retail area. That's a perfect example of what a strong management team can do.
Creative, you thinking it otherwise.
Nimble.
Yeah, I'll stop on each of these. Pump spotting was another one that we didn't have up on the other picture, so that's good. Pump spotting, women led, and a really interesting approach on keeping women in the workforce and helping companies keep women and retaining them as employees, so that at the time of having a baby, they don't leave the workforce and don't leave that company where they're so valued, by providing services, software, through a variety of different things to allow feeding babies. So it's breastfeeding. And they have an amazing portfolio of services that can support that, both at the individual mom area or dad, and for the business side. And they provide all the resources. And we invested because the founder had phenomenal passion and really relevant management and marketing expertise in this area. And the marketing expertise is one of the things that was so impressive. He really understood how to identify the way into both businesses and to the individual needs in a way that was really powerful. They solved an unmet need in an innovative way. And they had a really nice beginning traction of having their initial customers.
Yeah, like, yeah, and they are a Maine-based company.
Yeah,
Which is really exciting. And they too had to do some pivoting because of COVID as well.
Yeah.
And have kind of found their way out of that very strongly. So, the strong management team was really key again in that area. The good examples of that. Yeah.
I think another thing that made it an interesting venture was the fact that federal regulations are requiring employers figure out ways to accommodate women at work, and it's in the business's best interest. I mean, they don't want to, a woman's been there for how many years and is in a management position, and all of a sudden she
has to make that choice,
you want to keep her, and you want to keep her really glad and connected to her place of work. Who's helping her be to her family what she wants to be.
And then the last example, and I did choose all Maine-based. CoreStorm's a company that we've been investors in for a good long period of time. They're based in Orono, and essentially they help what they can refer to as informal education providers. So think about people that are doing adult education, and other groups, streamline the whole registration and payment processing thing to make it easier so that the educators can focus on providing education and not the registration and the payment component of it. And so they're a company that has had just this really wonderful stair-step growth. They keep getting larger and larger each year. They just went over 1 million enrollments, 600 customers. I think they're employing about 20-something people in Orono now.
Yeah.
And they've really done a very nice job. And again, why do we invest and reinvest? And this is an example where there's been what we call follow-on rounds, where they originally came to us for some money. We provided that seed capital, and then as they grew, there was a need for additional capital. They came back, and we've had many of our members continue to support them with additional investment, and new investors from our group come in and say, I'd like to get in on this. And I think they've done 3 rounds with us.
Yeah.
So the founders had an excellent strength in the field. They actually had done some consulting in this area. And
Website development.
yeah, they were website developers, and they were developing something for somebody, and they said, wait a minute, we could
Do something
actually
with this.
create a business around that.
It's not for schools, but it's for like after school.
After school.
Extracurricular.
Museum.
Museums, yeah.
We're doing a lot of different ways of going to market, and they've done a great job of expanding it.
And one thing that I find about this company is they're almost like the gold standard for their reporting
Yes.
to
Oh, yeah.
investors. Very regular, easy to read, show KPIs.
Key performance indicators,
Keep, and they're very honest about what wasn't working and what they had to do to change it. They don't hide anything. So, just back to one of the other points that Sandra made about what the expectations are for investors in terms of reporting.
Yeah, integrity is a really big
Yeah.
piece if we're gonna be partners with you going forward, trying to make the business work. If you don't know what something is, don't smoke and mirrors and try and just say, you know what, I really don't know that, and that's a great question, I'll get back to you.
couldn't agree more, yeah. Also, they had a great business model. This idea of reoccurring revenue is something that investors like. That idea that you're going to create something that has a subscription aspect to it that is what we call sticky. That likely that once you get someone to become a customer, that they will stay a customer because it's very, very simple. And if you need examples of stickiness, I would suggest maybe Netflix is a good example. Maybe your Microsoft Office subscription, possibly your phone subscription with Verizon, AT&T, or whomever you're with. These are all examples of what's called SaaS models. It's software as a service, and this is a good example of that. Bob, you already hit on they consistently deliver on their commitments, and they communicate it so very well. They are just, we never have to go running after them to get their reports and the like. And it's both the good and the bad, and you're absolutely really honest. And they are doing a good job of developing a company that's growing well-paying jobs in Maine. And I would say that's another thing about Angels is that we're on some continuum of we'd like to make a return on our investment, But most people aren't pure ROI, return on investment. They're also looking for ways to help and support entrepreneurs like yourself, because that's the growth that will be to the benefit of everyone in Maine. And hopefully, as we retire, you'll help us out by giving us some kind of making Maine a place that we can still stay. So, anything to add on that one?
You were just talking about, that communication piece, I guess. It's like I keep saying, if you don't let us know that you're starting to stumble or you're running into some trouble, there's no way we can be of help. And it may not be that we personally would know, but a lot of what you're getting access to when you have an angel investor is the Rolodex. I mean, we're out there in the
Do they
community.
know what a Rolodex is?
Oh, yeah, their contacts, our contacts list.
You know what a Rolodex
Thank
is?
you.
I still use that. I don't think we have a Rolodex.
Your LinkedIn connections.
There you go.
Yes. So, it's hard to sort of go, oh gosh, I don't want them to know, I don't, and it's like, we can't help, if we don't know.
Right. Oh, I think I just put this in because I'm going to talk about just, not to talk about, but just a few of the companies that are women-led. I thought that was important, and there's a number of other ones we could also put, but those are four that came to mind. I don't know if there's some other
In
ones.
addition to Atlantic Sea Farms and Spotting.
Yeah, of course, right. And High Bite, yeah, you had High Bite, but I
High
had,
Bite.
these are my additional ones,
Yeah.
right? So. All right.
So how do you find an angel investor? So for Maine Angels, a little bit about our background. I think Sandra covered some of it, but there's 80 and we have about 80 members. It varies year to year. We make I'm going to skip down some of this because I'm also taking about time for questions, but to do angel investing, you need to meet certain criteria as an accredited investor as determined by the Securities and Exchange Commission. In our angel group, we work as a team examining a company. Those investors who are interested, if a company is applied and pitched to us, but people then invest individually. Again, typical investments in some of these are maybe grouped together, or could be individual, depending on what your raise is. It's anywhere from an individual investing $10,000 and up, or as a group 50 to, in an aggregate 50,000 to 200, just depending on the deal. It could be more or less, and it depends on the investor. Maine Angels also has what's called a sidecar fund, which is Dirigo Angel Fund, which if once a Maine Angels invests in a company and has due diligence, and their Maine Angels investors who invest in a company, they then can be considered by the Dirigo Angel Fund for investment as well. And could add even up to from $100,000 to $250,000 to a deal. And Maine Angels collaborates with Maine Venture Fund, NVF, Maine Technology Institute, MTI, and other funding sources in Maine as well. So we're all working together on a deal that's a Maine-based deal to help them become successful in their fundraise and grow their business. So this is a copy of Maine Angels website, maineangels.org, and there's a tab for entrepreneurs and just information about us. So, and how to apply and what the criteria is for applying, what's a good fit, similar to what we've all talked about. And then there are other angel groups. Sandra alluded to the fact that there's 22 angel groups in New England and 250 plus in the United States. There's a Angel Capital Association, or ACA, which is a resource and a group of many angel groups in the United States. And they have more information if you're interested in finding other investors outside of Maine. They have information for entrepreneurs, FAQs. Some angel groups only invest in certain sectors, so like clean tech, or consumer products, food. It runs the gamut. Others are, sector agnostic. And then so this website has all kinds of information for entrepreneurs. And these links will be in the pitch deck that's going to be shared.
The end. I will stop the share.
Great. And yeah, so we'll open it up for questions if anyone has any. I know we did receive 2 questions in the chat. They were talking about mobile health clinics, and I think you did a good job of addressing what type of businesses are good investments, and so I think that was you addressed. But if you have any comments on privately mobile health clinics. you can say that now.
I think it would depend if it was a single mobile health clinic.
Right.
Or it was something that was, multiple mobile health clinics. Again, a standalone business just doesn't generate enough individual growth normally to be able to say, okay, if I take in $100,000 worth of investment, I'm gonna be able to return to you $300,000 to $700,000 in return for that. Yeah,
I think too, that this brings up a good point that, in general, in that, you can grow in Maine, but we know the market perhaps for mobile health clinics is throughout the country. So having those aspirations, that's the scale piece. Even though it's a company that's based in Maine, they, in reality, in order to grow to levels where investors would be interested, you have to have aspiration to grow outside the state. And certainly, again, investors and all the support systems in the state can help you do that. Like Maine International Trade Center helps you grow outside the country. So there are resources like that.
Yeah, and I agree with all that, and I think the thing that would be the telling point is in your business plan, that outlined as to how you are going to grow. And do you have something that's differentiated from other mobile health clinics? Because there are mobile health clinics already around, and that's not to say that having another mobile health clinic is not, is still a great idea, because there is a need. But would there be something that gives you a different point of differentiation that would make it that much more attractive, so that you would have that growth both either geographically or into new markets or the like?
Great. Yeah, so we have another question in the chat from Tina. Can you talk a little bit more about the minimum viable product? Do you invest in pre-revenue businesses, or must there be a certain level of sales or pre-sales?
I would say that we will look at pre-revenue businesses. What we need to see is that there's been a good level of customer discovery, that you've actually gone out, talked to potential clients, like here's this new thing that I have. What do you think? Oh yeah, that would be something I would use in my business. Well, would you pay $10 for it? Sure. Would you pay $100 for it? That seems a little pricey. Well, what about 75? I'm like, have you really gone out and even if you haven't sold it, you have to really know your customer base and be able to articulate or justify that really has some traction. I would also say that there has to be some market evidence that there would be other people that would be willing to do that. So what's the size of the market? You don't have to be the only one. There's usually, if it's a really growing market, there's room for more than one kind of business that might address that. But it's not that we won't look at it. We have to just have a pretty reasonably good sense that there's really a market there, because there's a lot of businesses you can put money into and they haven't really gone out, and all of a sudden they try and grow it at any kind of scale, and all of a sudden the whole thing falls apart. So, I don't know.
That makes sense.
Yeah,
Yeah.
I would add one other thing, which is the further you are from actual revenue, the more heavy lifting, more risk. And and this whole game is about risk and reward, right? And so if you can de-risk your business plan, or de-risk your idea, And that's one of the things, once you have revenue, that's de-risked that because now you have proof of it. So if you're going to be pre-revenue, then it behooves you to come with really good, solid market research and other data points that would indicate that even though you don't have revenue yet, you are likely to get it. And the other thing I would say is, if you can go to a place where you are post-revenue and showing that acceleration, that what we call traction, then it's in your best interest to do so because you've just de-risked your proposal and your deal, and we would be expecting to take less of your company.
Yeah, and I was thinking again, if it was something like a website, you don't have to have the perfect website already designed. You can have just a skeleton of a landing page and then it would look like this, and it can be even done on diagrams and not have to even be up yet. And what you need the money for is to have the technology to the person that can come in and code the whole thing. Or, you know, an app design that even if it's not online, this is what it would do. You'd go here and then this would be the second page and then it would do something like that. And so it can't just be an idea on a napkin. We're not gonna really look. We've got too many other options that look better to us.
Awesome. I'll read out this next question from Ames. I'm an established brick and mortar business looking to expand our business plan to include an e-commerce or virtual ordering of product, as well as subscription or membership services that could expand outside of Maine and New England. Would this be something that would be approached for angel investing as opposed to maybe some other resources that they could have?
It all depends on the business and the business plan. Again, you know, what's the potential for growth and return? I'm sure, yeah, it really depends on what it is and some of those factors that we talked about before in terms of what we're looking for in, you know, in a company and what you're presenting to us for information, is possible. Yeah, every business is different, so it's hard to know. One thing about when you're applying to Maine Angels too is we often, if we get, what we do is we each month we review who's applied and we pick 2 to pitch to our investors. Often if we don't pick somebody, we will at least give some feedback on why and when you might be ready, if that's part of the issue or whether it's just not the right fit at all. Also, if a company pitches to us and nobody's really interested, or we get to do due diligence and then people aren't interested, again, we get feedback and whether you can come back again. So it's not like you're going into a black box either. If some way you can connect with people who have experience in this area, they may be able to coach you as well on whether you are a good fit or not, if you can give more detailed information about your business.
And one of the things that I often tell early entrepreneurs is there's a lot of pitch contests out there, as well as these different programs for entrepreneurs. You know, that there is nothing wrong with going into a pitch contest for the first time and being nervous. The more you can get out there and kind of expose your idea to having people give you feedback, because most of the pitch contests, you know, they'll give you some feedback on, well, this seems like you need to work harder on this, or like, can you get this idea more clear? I didn't understand that. Or this doesn't seem like something that's going to be investable. It's really helpful feedback. And the more you do that, the more people like us that are out there watching these pitch contests are going to learn about you and go, I really want to go talk to that guy. That sounded really interesting.
Yeah.
So it's a way to kind of get some visibility and some feedback and just, you know, by the time you come to us, it's better. Somebody's actually heard of you before.
Yeah, so you can get a sense of how that works too through Greenlight Maine. Is, I can't remember what channel they're on now, but you'll see
NPN, Maine Public.
Maine Public does, yeah. And
You're all the main thing, right?
yeah, and you can get a sense of some of the main companies. So, and you can look on their Greenlight Maine's website and they show you know, they had videos of all their past seasons of that, as well as in Bangor, there's the big big gig
Yeah,
contest as well, and I'm sure.
that comes with a little money
You
right
know,
off the bat.
Right, so Women's Business Development Center can help you. With those, what those resources are, as well as SCORE is well aware of all of that. In whatever part of the state, depending on which of their chapters is working where, so those are resources for you.
Great.
We answered the question.
Oh,
Clearly, Sue.
Thank you.
Well done. Okay.
I thought I'd jump in with a couple of questions based on what you all said. So, hi everyone, I'm Sarah Gret with the Women's Business Center. I wanted you all please to talk about management team a little bit more. So you've talked about management team a lot. Some of the businesses that we work with are one awesome woman at the lead. Can you elaborate? Would you ever invest in a person, in a business that is run by one person by themselves? Or if not, can you talk about what you'd like to see in a management team, please?
Well, no one person usually has all the skill sets that are needed to run a business. And if financials are not your thing, knowing that you have a really good financial person, either as a contract or as a accountant that you hire to just do whatever work you need, but somebody's got to be able to give financials that are gonna, one, make you run your business better because you need that information, but two, be able to show an investor, here's who I am. And then what am I gonna do with the money that I'm asking you for? And this is where it's gonna help me get to. Marketing, you might not be a really good person with social media, or looking at all the pieces of a business. It doesn't have to be that they actually are co-founders as much as you need to be able to address those pieces and how you're gonna do it. I mean, it may be, wow, you've got a great business school right here in Portland, and there's ones up at or whatever. Interns are phenomenal. They love the opportunity to be in real world situations. I mean, we hired 2 college students to help us at Maine Angels, and they're unbelievable because, of course, they know the technology so much better than we do. And they're like, well, you just do this on this. And we're like, what?
Speak for yourself.
So I would not look at a business if it was just a sole proprietor. I just think they need to have thought through what are the pieces that you have to know your own strengths and know your weaknesses and how you're going to address the pieces that you weaken.
Yeah, and if you're going to grow, at some point, you're going to need some extra help. So even just if your business plan says, I know when I get to, 18 months in, I'll have finished putting this product together, I'll need a salesperson, or I'll need to hire a rep to sell my product, or something like that, as well as I'll need the social media piece, whatever it is that your product is, it's or your business is, knowing being able to recognize that at some point you won't be able to do it yourself, and who you're going to need to help, what type of person you're going to need to help you.
One of the kind of common questions that's often asked during what we call the due diligence, which is kind of once you had a chance to introduce your idea through a pitch. If we're interested, we then go into something that's like deeper due diligence. One of the questions often asked is, what's your next hire?
Yeah.
Because that's a recognition you're not going to be probably, frankly, if you've got everybody on board that you think you're going to need when you're 4 or 5 times the size, you're probably spending at a burn rate that we're not going to really like. So from a financial acumen, that sounds like probably a mistake. So what we want to know is, do you understand what you're going to need to have that develop? And I would say the other thing is, a lot of people come with really strong boards of advisors, people that they have connections to, that shows a recognition of the need for the various key areas of expertise. And so a board of advisors, which is a little different than a board of directors, but that can also be another way of getting some of that expertise, is a great way. If you're a technology company and you're not a technologist, do you have a partner with a company, a consulting firm or something like that, or somebody that you could partner with? That might be the kind of person where you go from being a solo to dual founders. because it's just so critical to what it is that you're trying to develop.
Great, thank you. And can you elaborate just a little bit on due diligence? You've talked about that, all of you, a little bit. What does that mean and what might an entrepreneur expect during that process?
It's our attempt to try and figure out whether your business is what you think it is. And so, well, depending on what the business sector is. I know like, diligence calls sometimes, or we're calling your customers. We might be calling suppliers. We might be, doing a real fine deep dive into the financials. I remember one deal where somebody came up and said, "Do you realize the founder is paying themselves $350,000 a year?" I was like, well, that sounds a little steep. But you know, if you didn't really take it and look under some of the categories, you wouldn't have necessarily seen them. So we're trying to de-risk as much as possible the unknowns, identify what are the threats and what are the strategies that are being proposed to work at those threats. So there is sort of a checklist that we kind of go through.
Yeah, we look at the team. You know, in terms of, you know, when it, and what their past experiences are, their successes, or if they've had failures, which everybody has at some point and somewhere, and how they dealt with that. Information from other investors, perhaps. And what their experience has been working with the company, whether you've achieved some of your goals, and also who your support team is, you know. And very often some of those are, some companies we see from Maine, are, you know, sport mentors. Yes, sorry, I just started with women's business center, sorry. You know, those, you know, assisted, you worked with MTI or any of those. So that also is a source for us to get, you know, a better feel for the company and the risk involved, as well.
I think the term is a legal term. It was originally used by law firms and it's been glommed on by people like us. It's part of a process where we, first of all, want to get to know you through a first encounter, if you will. And that I always suggest to founders to try to create relationships before you want to receive money from organizations. Start the relationship early so that there's a building. And most of us are very open to the idea of advising and giving counsel and giving feedback and the like. And so generally with Maine Angels as an example, and it's in the case of most investment situations, there's some kind of way of applying. And if that is seen as being interesting and relevant and fitting our criteria for what we're looking for an investment, you'll be invited to pitch, which is generally a short presentation, usually somewhere between 5 and 15 minutes. Ours are a 15-minute, some go even a little bit longer than that. And then if there's enough, and that's a very concentrated kind of, here are the key points of our business. If we're interested at that point, then we move into the next stage, which is the due diligence, which is, okay, let's roll up the sleeves and let's really talk through those 11 components that I was showing before about your business, really understanding it and us asking a lot of questions that are fairly deep and fairly detailed. So we really get an understanding, not only of your business, but by having that interaction with you, we start to get a sense of who you are and the trust relationship builds and we can see how you work and how you think. So
We
that's,
also get a chance to interact with, if there is a team and it's not a solo entrepreneur. What's that dynamic? What you want to see is a respectful and participatory, everybody's bringing in. Or in the case of one that has a physical footprint, we want to go do a site visit. You can learn a lot by just going down. So those are all pieces of the diligence that you wouldn't do in a 15-minute pitch when you're just presenting to our group, or somewhere between. Our meetings can go anywhere from 30 to 45 people in the room. But that is not a 15-minute pitch, just can't give us enough to make a decision on. It's not like Shark Tank. You see it on TV and you see these guys and you think they're making that instantaneous decision. There's been a lot of research that's gone into it and a lot of research that happens afterwards. So it's a little bit of a misconception.
Great. And then I want to ask you one more question, and then I do see there is one in the chat. But we've talked about due diligence at the beginning of the process. Can you elaborate a little bit more on the exit possibilities? Like, what are some examples of exits that you've seen in deals that you have invested in, or what are hoped for exits in some of the deals that you mentioned today? I think that term would be helpful to explain a little bit more and give a few examples of.
Exits, the one that you always kind of see the Shark Tank maybe exit is that idea of an initial public offering, IPO. So think if you were an early investor in Google and they get to that place where they're then going to become a publicly traded company. That's what people often think about, is that's the exit. The reality is, in the world that we live in, most companies don't exit in that way. An actual exit would be an acquisition by another company. So Pika Energy, which is a company that was in our portfolio, was acquired. Maine company, and working in alternative energy. They had an amazing product that the company called Generac, which makes the generators that you often see outside of people's homes, saw it as something that would fit very, very well into their portfolio, and they acquired Pika, and they actually brought the management team from Pika over to run this new division, which was into alternative energy. So that's an example. I think a lot of acquisitions occur, and we even have a company right now who has not exited in either of those traditional forms, but is starting to pay a dividend back to the investors, which is a way of exiting. And when we talk about exit, it could be the company, the founders are exiting at the same time as we are, or it could be that we're exiting and the founders continue. But in some way, what we want to be able to do is get the money that we invested back out of the company, hopefully with a return, so that we can go out and do the same thing for the next companies that are kind of coming up. It's almost like growing the garden. That's the way I look at it. The flowers get put into the vase, and that's beautiful. And then you want to go take the seeds and put them back in the ground and grow the next group of companies.
There's one last question on there. Do you want
Oh, yeah.
We can cover this one. So how many of the businesses you work with are still employed in their day jobs? Many of us do not have the ability to quit our day jobs until we can fully secure the financing for our projects. How many businesses are started and running that you are with? Couple questions in there.
Yeah.
I would say the majority of them, they have moved off of their day job and are working full time. And it may have just very recently happened that they're doing it as part of their raise. I think the friends and family period that we call kind of that precedes us from a financing standpoint is where the day job thing makes total sense. But you're getting to that place where, again, back to how do we look at your risk? If you have this day job that's taking a good portion of your day,
40 hours of the week.
then where is the time for building that company, and where does it fit into your priorities? So that would be seen as a much higher risk, and it would be much more expensive for you in terms of the amount that, if we were interested, that we'd be probably looking to get as a return, a percentage of your company in return for the investment we made. So most people think of transition.
I don't think anybody that we're probably invested in now
Yeah.
has a second job, but I mean, Core Storm was one of your examples.
Yeah.
They were a website company. They developed this website, decided that this maybe had some legs. It was a complement to what they were doing, and they were able to figure out, all right, I'm gonna put 30% of my time, and over time it grew, and they kind of don't do the other one anymore, and that's all they're doing.
And I think some companies have gotten support through grants or NSF funding, but through MTI and the ability to do that. So it allows them to kind of transition over. They have some, funds. Those funds aren't just necessarily for building a product. It also helps support somebody so that they can start to transition out of their day job, so to speak.
And I would think that you would need to have like a lot of family and friends that were doing everything pro bono.
Yeah, some of those helping you.
Great. Well, thank you all so much for being here today and sharing that information. And thank everyone for being here and joining us today. You will receive the presentation and recording after the fact, but if I'm not seeing any more questions, I think we'll wrap up.
Thanks, everybody. Great.
Thank
talk.
you, thank you.
Good
Really
luck.
Good questions.
Hope we hear from you.
Great. Thank you. Great, thank you, everyone. I'm gonna end this.